Good morning. Welcome to Stock Market Today. It's Friday, January 18th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter at Dan Russo _CMT. If you're on StockTwits, I'm there as well under the same handle. That's at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email, follow along with this show, get daily stock ideas to consider in your inbox every morning before the market opens. So U.S. equities were higher in Thursday's trading, but finished off the best levels of the day. S&P 500 broke through the closely watched 50-day moving average and resistance at the 2630 level. Treasuries were mostly weaker. Dollar was down on the sterling cross, but stronger against the yen and the euro. Gold down 10 basis points, and oil was weaker as well, settling down about 0.5%. As we get to the desk this morning, S&P futures are up 0.5% to start the morning, and the index is on track for its fourth consecutive weekly gain. European markets were firmer overnight, following gains in Asia. Treasuries are weaker across the curve. The dollar is down on the euro cross, but stronger against the yen. Gold is down 60 basis points. WTI crude is up 1.3% to get things going on a Friday morning. Taking a look at the S&P 500 now. Still below the 200-day moving average, and we've met resistance at the 50% retracement level. And what we're looking at is the highs from September to the lows on Christmas Eve, and then retracing the move and looking at some of the key Fibonacci retracement levels. And we tagged one yesterday at 2645 before fading. Now we're trading right back at that level here this morning. It's important to consider where we could go should we continue to probe into this resistance zone. The 61.8% retracement level is right around 2715. So that's, if we continue to follow through, that's a logical level as well. 200-day moving average is a bit higher, up at about 2740. RSI continues in bearish ranges, but it also continues to improve. We're not ignoring this right now. We are still in bearish ranges. We are still seeing a series of lower lows and lower highs, right? So right now, I'm still calling this a counter trend move within a downtrend. One positive attribute is the fact that Chaikin money flow is bullish, but I don't want to chase here, right? I think we could pull back. The pullback could be shallower than people are expecting. Maybe we pull back and test support in the 2550 to 2530 area down around here, at which point gives our indicators some time to work off their massively overbought conditions, and we start looking for some ideas in names that have held up and shown some decent relative strength to potentially add to the portfolio. But I'm still not chasing here. Market in a minute. What I'm talking about in my note to Chaikin Analytics clients today: stocks advance on a potential trade progress. That's what really sparked the rally in the afternoon yesterday. S&P 500 meets the 50% retracement level of those September to December declines. We just chatted on that. Semiconductors are building a relative base. Semiconductors are a key group for me. I watch them closely, especially how they're performing relative to the broader market. As they're basing, if they begin to turn higher, you got to increase the odds that the market's going to go higher as well. Growth leading value during the rally. I do think that that's interesting. Futures point to a higher open here. This, as I said, trading up about 0.5%. A little bit of improvement continues for the power bars on the major indices. Dow 2 bulls to 6 bears. S&P 500 70 bullish or very bullish stocks. 119 bearish or very bearish stocks. NASDAQ still skewed favor in 2-to-1 in favor of the bears. 12 bullish or very bullish stocks. 23 bearish or very bearish stocks. Small caps, we've talked about it. They're showing relative strength, and they outperformed again yesterday. Marginally so, but they did outperform. 284 bulls, 436 bears. That ratio continues to improve. Bonds, relatively flat. Materials had a nice day of outperformance yesterday, but the group still is skewed very much in favor of the bears from a power bar perspective. 2 bullish or very bullish stocks for 11 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bearish. Major indexes are mixed. Stock of the day today, OFG Bank Corp. Banks have been on fire with earnings this week. OFG is no exception. Closed at $17.95, down a little over 1% yesterday. Stock does have a very bullish Chaikin Power Gauge rating. due to very attractive financial metrics, strong earnings performance, and positive expert activity. When we roll up the 20 factors that fall into these four categories, we come out with our very bullish power gauge rating. Now let's take a look at the stock. Very bullish rating, strong trend. Banks and thrifts, though, still a weaker industry group. But this is what I'm talking about when I talk about relative strength. Very bullish stock, really strongly outperforming the market here and has been doing so since mid to late October. Stock is currently overbought, though, so we don't want to get involved just yet. Money flow is strong. Give the indicator some time to work off the overbought condition. But again, as I said, when we're thinking about names to consider on the long side, OFG has to be a contender. Why? Because of this relative strength right here. As the market has been dropping since September, OFG has been going sideways. That's solid relative strength. Stock is not being sold off with the market. Above a rising long-term trend line, I think you want to keep an eye on this name. They do report next Tuesday, the 22nd. Sector tracker now. Movement of the major sectors over the last 5 days. Bank earnings have driven financials and kept to the top of the list and kept them there. Real estate's holding in well, up nearly 2% over the last 5 days. Healthcare, been one of our favorite groups, continues to remain the case. Some solid relative performance there. At the bottom of the list, energy starting to give a little back from a relative performance perspective. Utilities are the only group that's negative over the last 5 days, as yields have kind of backed up a little bit after tagging the 2.55% level a few weeks ago. Materials, another group that we're watching closely, but beginning to fade. Staples, another group. Staples were leadership as the market was becoming defensive and is trading lower. Now their relative strength is waning. I think that we're starting to see an unwind of some of the counter trend moves. We'll see if they do continue. It's part of the reason that I'm not chasing here. Still a lot of rotation in the market. Hard to discern a real trend. Now, our industry in focus today comes to us from the industrials group. It's aerospace and defense, which over the past 6 months has underperformed the S&P 500 by 2.78%. Powerbar, which measures future potential, is weak. Has 8 very bearish or bearish stocks, 4 very bullish or bullish stocks. It's currently ranked number 13 of the 21 subsectors we tracked and has moved down 4 slots over the past week. Now, some of the indicative names there, BWXT is very bearish. TransDigm, TDG is bearish, and Axon Enterprises, AAXN, is bearish as well. Now, we've looked at BWXT recently on this show, so we're not going to look at that one today. TransDigm, what I will say is it's shown some decent relative strength, so it's not really indicative of what we want to look at. But let's take a look at Axon Enterprises. Ticker symbol AAXN has a bearish rating, weak trend, weak industry group, type of name we want to avoid if we're following the process. Ribbon at the bottom of the screen shows us that that power gauge rating has been predominantly bearish since mid-September. And somewhere around mid to late October, stock began to underperform the market, and that underperformance continues. Now, the stock is overbought, and money flow here, while ticking to the positive side with this recent rally, has been persistently bearish since early to mid-September. Type of name we don't want to own. If you're aggressive to the bearish side, if you think the rally here into resistance for the market is likely to fade, you should consider looking at playing this name to the bearish side. Look at the options market, see what they're giving you for the puts or bearish vertical put spread. But regardless, even if you're not going to trade it from the bearish side, type of name that we don't want to own. Weak stock in a weak industry group, underperforming the market, becomes overbought. Definitely don't want to look at it on the long side. S&P 500 movers yesterday on the gainer side of the board, Fastenal. Solid earnings, at least the market thought they were solid enough, sends that stock up nearly 6%. MTB, bullish rated stock, up over 5.5% following their print. PPG's guidance, investors like what they heard there, stock up 4.7%. GT, Goodyear Tire, EPS sends that stock up 3.75%. No real news on HBI, sends that stock up 3.7%, call it 3.69, fine. HBI has a very bearish Chaikin power gauge rating. Now on the loser side of the board, Morgan Stanley's earnings disappointed the street. Stock is lower. So the banks have done well, but some of the brokerages have been dicey. Morgan Stanley down 4.4%. CTL, one of their large holders, has announced an intention to sell stock. That sent that stock lower by 4%. Western Digital kind of been on the weak side of the board for the past few days. Didn't see any real news to drive yesterday's move lower by over 3.5%. F5, FFIV catches a downgrade, sends that stock lower, 3.36%, and KeyBank reports earnings, KEY. That stock down 2.5%. But again, the banks have been showing some solid relative strength this week. Now let's look at yesterday's surprises. Netflix beat earnings but missed revenue, and their guidance was a little bit weak. Stock is trading lower by about 2% here this morning. Morgan Stanley, they reported yesterday morning they missed. Stock traded lower. MTB, M&T Bank, talked about them already. Earnings beat by 28 cents. That stock went higher. PPG beat by 6 cents, and their guidance was good. AXP missed. Stock trading, that was this morning's print, or I'm sorry, last night's print. Stock is trading slightly lower here this morning. Earnings today on the calendar. Kansas City Southern, KSU rather. Big name in the transportation space, rail name to keep an eye on. Regions Financial, STI and STT round out bank earnings. Those are all neutrally rated. Schlumberger, SLB, in the very weak energy space, going to report before the open. That stock has a bearish rating. VF Corp has a bearish rating. We were looking at it on the bearish side earlier this week. Investors like what they heard here this morning. Stock's trading up 9% in the pre-market. So let's look at what I'm looking at today in my note. Fridays, I look at key themes and relationships to try to get a read on what the market may do based on, sentiment, risk on, risk off, based on these key themes. One of the main ones that I look at, I've looked at it numerous times here, and it is starting to intrigue me. Semiconductors relative to the S&P 500. So SMH relative to the SPY here. Still below a declining 200-day moving average, but we've held this support level now a number of times. Starting to, build a nice base, and the RSI of the ratio is showing a series of higher lows. Now, we're not out of the woods yet. We're still below the declining trend line. We haven't really broken out in a meaningful way to the upside, but this is a relationship that I watch closely. I write about it every Friday, but honestly, I look at it every day. If semis can build off of this base and begin to trend higher relative to the market, that would be a positive for the market in general. There's a high correlation here, and what's interesting is semis tend to lead. So if this is in fact the bottom here on the relative relationship, and they begin to move higher, they will have bottomed here in the October-November timeframe before the market bottomed in December. Again, not out of the woods yet, but something to watch closely for a read on the overall market. Growth starting to lead value again. We'll say, look, through 2017 and that nice steady uptrend, growth was a solid outperformer relative to value. And then kind of back half of 2018 started to top out, took out the 200-day moving average. Now, the 200-day moving average is still rising. It's just doing so at a slower rate. Now, we've been trading either side of it here. What we're looking at is Russell 3000 growth relative to Russell 3000 value. Again, a key indicator, because number one, if this is the bottom, it bottomed before the market and is beginning to move higher. If it continues to trend higher, we have to start to think about the market trending higher as well. And look at what's happening here with RSI of the ratio. Still in bearish ranges, but some of these lows recently have been around the 50 line. So potential shift in momentum for the ratio could be tipping its hand at a likely change of this downtrend here, this near-term downtrend. Again, watching it closely, keeping an eye on it. I report on it every week. I write on it, but I watch it every day. And another one that we're watching, high beta versus low volatility. This is really an indication of risk sentiment in the marketplace. High beta tends to outperform when the market is strong, and then underperform, when investors are seeking a risk-off type environment. Now, you can see the clear breakdown ahead of the market back in the summer when the market topped in September. Bottomed out here in conjunction with the market, but now a key test here at broken support, which could now be resistance. It held as resistance on the initial rally, faded with the market. We'll see if it holds again. If it breaks out, we have to think about bullish ideas in the overall market. If it fades here and trends lower, it could be a bearish signal for the market in general. So that's it for today. I hope that everybody has a great weekend. Head over to chaikinanalytics.com/today. Sign up for the email to follow along with this show. Also, if you spend some time on the website, you can read my weekly blog posts. I will see you on Tuesday.